What's up everyone, back here for another video. So if this is your first time on the channel, hi, my name is Alex Temes. I've been day trading for 10.5 years and I made over $8.7 million trading, and we'll pop up my broker statements on the screen right now. In today's video, I'm gonna talk about the #1 trading indicator that Wall Street doesn't want you to know about and how you can use it to make money. So when I first got started trading, I was looking for the magical, mystical indicator that would be the holy grail of everything. The reality is there's no magical indicator that's going to take you from an unprofitable trader to a profitable trader. Most indicators are lagging indicators. What that means is by the time you see the indicator, it's already too late. For me, the one indicator that has been tried and true for years and years and years is the VWAP. The volume weighted average price. Now, the difference between this indicator and other indicators is that it is not a lagging indicator. It changes in real time every single second of every single trading day. So for me, using the VWAP is a very, very good indicator to tell me who is stuck on the trade. And once you know which side of the trade is stuck, then you can make a plan and then you can capitalize. Let me explain. VWAP is the volume weighted average price. It's a trading benchmark used to provide the average price that a stock is traded throughout the day. Based on both the volume and the price, it's calculated by taking the total dollar amount traded for a stock and dividing it by the total volume traded over the day. What it basically means is this is the average price per share that people are holding the stock for that day. So if the stock is trading at $5 a share and the VWAP is at $4.50 a share, that means that the average price that people are holding the stock is $4.50. And if the stock is trading at $5, that means most people are up 50 cents a share on the stock. Now, why is this important? If the stock price is trading above the VWAP, that basically means that the long bias traders are in control. They are up on their position and they really have no reason to sell. They're going to continue to buy dips and buy dips and buy dips on the stock. Now, what if the price is actually under the VWAP? That means that the sellers are in control. That means that anytime the stock bounces, those sellers are probably going to sell, because think about it like this. If you're in a position and you're losing on that position, the closer the stock gets to your average price per share, the closer the stock gets to VWAP, you're gonna be like, you know what? I'm down 50 cents a share on this stock. If it just gets to even or close to even, I'm gonna sell for break even and be done with it. So knowing where the stock is trading in relation to VWAP gives you a better idea of who is in control of the stock. Now, how do I use VWAP to my advantage? Well, I use VWAP in multiple ways. #1 is for sizing. So if I'm a short bias trader, if the stock price is above VWAP, meaning that the long bias traders are in control, I only want to use 30% of my max size on that given stock simply because I am not in the right. For example, if my max size is 1,000 shares, I'm only using 300 shares above VWAP. The reason why is #1, it's a lot easier to stop out of my position when I'm wrong, when I'm using less size, and also I don't want to commit too heavy to the stock when it's going against me. So having 30% of my size on when the stock is above VWAP, when I am not in control, is my way to get a little bit of a piece, and worst case scenario, if I'm wrong, I could get out on small size. If the stock price crosses the VWAP and goes under, that is my signal to get a little bit more aggressive. Now maybe I'll go 50% size, 60% size, because now the price action is confirming in my favor and going down. Now, as a long bias trader, what you want to think is this: if the stock price is under VWAP and you're looking to bounce the stock, then you want to be 30% size under the VWAP, because you are not in control at that moment. The short bias traders are in control because the price is under the VWAP. If the stock crosses VWAP and goes from under VWAP to over VWAP, that is your signal as a long bias trader. Now go from 30% to 50% or above, because now you're in control. For me, I found that VWAP is the only indicator that is consistent. So just to summarize everything, VWAP is the average price per share that traders are holding a stock for that day. If the stock is above VWAP, it is bullish. If a stock is under VWAP, it is bearish. So you would only use 30% of your size based on which side of the VWAP you are. So if you're a long bias trader, meaning that you want the stock to go up, you would use 30% of your size under VWAP, and then if VWAP reclaims, you'll go 50% size and above. If you're a short bias trader, you would use 30% of your size above VWAP, and if it crosses, you go 50% size or above. Now, the more deviated the stock price is from VWAP, meaning if the VWAP is here and the stock price is here, the more deviated it is, the higher chance it has of continuing higher. Because the average price per share is here and the stock price is here, meaning that long bias traders are so in the money, they have no reason to sell. Now, the inverse is the more deviated it is from the bottom, that means that long bias traders are so underwater that any little bounce it gets, they're gonna get out to try to get as close to break even as possible so they don't lose more money. So let me know if this video makes sense for you guys. If you enjoyed this video, leave a like, leave a comment, subscribe to the channel, and let me know which indicators you use. I'm gonna include some live trading videos here and some more videos here. See you guys on the next video.